What happens when you go from one of the worst breadth readings to one of the best in just 3 days? Today we discuss whether Santa can come back into these markets, the dark pool liquidity from Wall Street, the VIX crush, the data surrounding it, and of course, whether this chart actually holds the key. Guys, there's a lot to talk about into what may be one of the wildest Christmas seasons we've ever seen for markets. Stocks, commodities, and cryptos. Let's get into it right now together. This is going to be a good one. Don't go anywhere. Well, welcome back everyone to the special weekend edition of The Daily Show. My name's Tom, and in today's video, we need to take a look at the data, the macro, and of course, the dark pool transactions and the big options flows in these markets. Wall Street's been up to something, and we need to discuss it together. But let's first talk about monumental history. $6.5 trillion. Let that sink in. That is huge. Yeah, we saw a massive quad witching event, 4.4 in the morning, 2.1 in the afternoon, and just in general bedlam across Wall Street right into Christmas. But will this calm down? Well, let's talk about capitulation for a moment. And this is, of course, one of our favorite reads, which is the percentage of stocks above the 20-day moving average. Last week, we moved underneath 10, which doesn't happen that often. You can see there are quite a lot of reads, though, over 20 years. And what we found is that if we weren't in a recession, generally speaking, markets were actually quite bullish. But if we just consider every data point, guess what? 72% of the time, we were bullish over the next 21 days to the tune of around 2%. Now, that's not bad. And of course, it suggests that maybe markets oversold themselves, even though it was very quick. And some of you guys, the boffins in our private community, links in the description down below if you're interested in joining us, 7-day free trial, basically came out and did one that I like. The 5, the 20, the 50, the 200, all three major indices, and found that since at least this bull market, October 22, whenever we saw these types of reads of oversells, we usually saw at least a bit of a rally, whether that was just a dip or it was the absolute major low. So it may not seem like we pulled back much, but actually the amount of liquidation that occurred up here was significant. And this is because people are using massive amounts of leverage. Have a look at this by the numbers. We saw this, and of course it was taken before Friday, 10-day advanced decline through the floor. Net 50%, net stocks at 52-week highs, absolutely got collapsed. And of course, in general, everything was falling below its moving averages. So it was full-blown, basically, panic in the markets. But should we really care? Well, it all comes back to, did the market buy the dip? And we did see some large dark pools that we want to talk about soon. More coming, by the way. But we also saw some of the worst breadth reads go to literally the best in just 3 days. Now, in similar situations like this, when we see the last 3 months, we see worst breadth to best breadth, that brings generally in the bulls. And you'll see here, Jason Gottfried over on X has actually done the data stats. 1 month later, even better than our other statistic, 80% of the time bullish, and 12 months later and 6 months later, 85% of the time bullish. So better than the standard odds, pretty damn good across the board. And I think one of the answers really comes back to when we look at VIX structure. Remember, we took a look at the volatility last week and we said, well, wait a second, the VIX doesn't seem to be panicking any more than just right here, right now. It's not panicking in the January futures, not panicking in the Feb or the March ones. They were just chilling. So really, this was a front kind of attack on the markets and most likely, therefore, a steal of our money. Yes, retail traders, you and me and all of us. Yeah, it looks like a lot of us got leveraged out. And that particularly was felt hard in crypto, which we have reported on. Take a look here, though, at Treasuries. Put volume here from macro charts. And you can see that is a large amount of put volume. Now, what did we see straight after this? A huge dark pool trade. Yes, it looks like Wall Street may even be getting back into the yield play, although that one may be early to call. So, of course, we'll talk about that soon. VIX, what's going on in the volatility? Whenever we see VIX spike over 50% like it did in a single session, again, some data stats saying that over the next 30 days, it gets crushed back down. And even FundStrat's Tom Lee had some data on this and basically said that if you go over a next month, every single time, only 4 reads, of course, but every single time the SP500 was bullish over that next 1 month period. So it really kind of holds up to this being like a flash sell, a flash liquidity event. And I don't think there's any other reason that we should really be looking at it. Yes, people say the Fed's done some changes and stuff like that. But just remember that this happens all the time. And this one was just around peak FOMO for retail, and particularly peak FOMO into leveraged funds. And you guys might think, well, wait a second, people are only taking 3 times leverage. When you look at the overseas markets, people are taking up to 1,000 times leverage, and they're doing that on 3x leverage funds. You do the math, it's pretty psycho. So yeah, that's only one, of course, outlier, but people are taking some serious money on there and losing big time. Let's now discuss, though, whether we're getting a Santa rally. So, of course, the stats do matter. And if we know it's Santa Claus rally is very important because, of course, if we have the big one, which is what we always look at every year, which is Santa Claus rally, positive January, etc., will we get this kind of stat again? Well, of course, this is what tends to happen in Santa Claus rallies. We like to see the green. And if we do get the green, then we tend to also get pretty good Q1s and pretty good calendar years. Now, if Santa doesn't come, e.g. the January and Santa Claus rally effect, not usually very good. So what happens here to markets, you may not know this, but this will affect the rest of the year in terms of gains. And it's very important that Santa does come to town. So will he? It seems more likely than not at this stage. And of course, we do know that if you bought the Nasdaq on Friday, which is of course 3 trade days before we end up going into Christmas, then if we have 3 sessions before Xmas and 8 after, and you bought the Nasdaq, you would be up 100%, or 28 to 5% of the time, not 100% of the time. So 28 to 5 overall. So that's a pretty good data stat itself. Also, you've got to ask yourself is whether the actual US economy is suffering. Remember, we do look at the GDP, sure, everyone knows that. But even if you look underneath the hood, US rail traffic, it's up big times versus 2023, up across the board. And of course, this is a good sign and something we've looked at several times throughout 2024. Let's now move over to crypto markets before we go dark pool. Of course, yes, we still do think crypto markets are going to do okay. And of course, Bitcoin is the leader. At this point, every other coin seems to be suffering big time. Have a look here at Solana versus BTC getting destroyed. Yes, it got crushed. The chart was no good anyway. It didn't look very nice, but wow, it's getting crushed all the way back down. Solana is now the cheapest versus Bitcoin that it's been in a very long time. In fact, since March of this year. So during that last kind of rally back up just before. Now let's talk about dark pools though. We already know we saw 2 of them. This was before, of course, the market ended up ripping higher after the Friday close. But these are significant. They're large transactions. Have a look here at just the sheer amount of transactions that went through this particular strike. Now, no doubt a lot of these are all hedges, liquidations, and all sorts of things. But have a look at this. Number 1 largest transaction on IVV out of nowhere with massive clusters. You just do not see this that often when it comes to markets. TQQQ also providing a monster trade in dark pool sweep coming through. And then we saw the Qs come through right on cue as funny. So then we see it go over here and you can see they are buying, and they clearly are buying because why are there so many damn transactions going through at the same price and then the market ripped higher? So you've got to remember when we're seeing these big dark pools, we have to pay attention to what they do and not what they say. If it's in the press, it's in the price, as we often say on this channel. But generally speaking, these are kind of big transactions. They're holding these levels. And that is what's going to be important this week. The Qs, the SP500, the Russell, they have to defend these zones. You don't want to see them drop too far below them, because that could signal these are all sells. But at this stage, you kind of have to assume now, based on price action, that someone has been trying to buy this dip. Let's now move over to Treasury for a moment. Massive put transaction coupled with one of the larger transactions we've seen. What are we looking for on TLT? It's pretty simple, 91 plus. If we get 91 plus, it probably means yields are dropping back down, and that's a good sign. I think it's too early now for treasuries to be bought, as a trade. Obviously, people that are holding them for 12 to 18 months, well, that's one thing. But if we get above 91, well, that probably will force in quite a lot of liquidity. So that'll be important. I also thought I'd just quickly mark out here. I have been a little bit more negative on a PLTR, that is Palantir, recently. And you may see why now. Large transaction, second largest transaction going through over the last 2 years on this stock just happened. And these all happen at these highs. It doesn't mean necessarily it's going to sell. Of course, you don't know that. But what you do know is that there has been a lot of activity up here, volumes improving, and there is a cluster. And whenever you get clusters, you've got to pay attention. Clusters here, massive ramp. Clusters here, massive sell. So is this a sell or a buy? I'll let you guys know. Like, you guys can decide it. Comments down below, let us know. Let's have a look now at the S&P 500. So volume was massive. Let's just think about this. Wow. I'm just going to zoom that out just to put context in it. That's a big one. That is a big one. And it is huge. So a lot of transactions, a lot of liquidity in the markets, which is surprising for this time of year. But anyway, that's OPEX for you. And you can see here that it did bounce back up. So what we want to do is look at this in the context of a weekly. Let's take a look here at the weekly. Nice wick coming off that first buy zone level. Not quite getting the gap fill. Obviously, that would be where you get the 20 weekly, which is an incredibly strong signal. As you guys can see, you may say, what time it went under here? Yeah, it never closed under, did it? It just went kind of gap under, bang, straight back up. So the 20 weekly almost hit, very nice level. And that may still be hit this week. And then we've got US 500, of course, rallying up above that 59.33. Now, these options high lows may be wrong. I don't know. Well, they are wrong. I don't know why the options market's done that, but it's probably something to do with OPEX. So generally speaking, US 500, what did we see? We saw a new higher high. And this is a pretty big deal because basically it says that Wall Street may push it back down again. But let's say we go down into the 58.50, somewhere around here. It's likely there's going to be some form of bid there. Now, of course, a day trader, a scalper, a swing trader will be very interested in seeing how this trades. But we can clearly see that someone bid it up. And you've got to remember this area here is basically all those dark pool transactions. So large trades have gone through at exact these levels. And that's important to note when you're looking at these markets. Another thing that we should be checking out is, of course, the overall options flow. And it looks like 59.10, 5900 is this week's put wall. Yeah, there are a lot of puts floating right on that level. And you guys know that, of course, it looks like the markets are trying to push back up. And if they can hold above 5900, then that won't create cascade. Basically, if we stay underneath these levels, we create net negative gamma. Overall, that means that we need hedging. Hedging, of course, equals downside flow. And in this case, 5900 and 5910 are going to be the levels that you would expect Wall Street to try to hold above. Now, if it can hold above those, let's say for the Monday, then what we might do is before Christmas, we might move into even trying to go up higher. Take a look at this. Suddenly 5970 getting a lot of strikes on it as well. And coming into January, we still see the 6100s floating and the 6200s floating. So if I was a market maker, I would probably try to keep the market above 5900 and possibly even try to push it into the 5950, 5970 zone by Tuesday. So these are some very interesting levels. And of course, 5900 will be the one you need to watch this week. And we will cover it again as we get updated data. Tesla, what's going on there? 400 is the bottom now. You can see this pretty clear, 400 massive put wall. And as we kind of warned, it was pretty FOMO. So yeah, 489 or whatever it is, all the way to 421. I would think that maybe 400 is where we're going. We will look at it on the charts very soon. Now, Nvidia is a little bit of a different circumstance. All of a sudden, we're entering into potentially positive gamma. 135, positive gamma. 140, very good if that does happen. 148, 150, absolutely phenomenal. So it looks like Wall Street's starting to wake up on Nvidia for the first time in a while, and we have seen good price action. So let's get into the charts, and first up, look at the leads. US 10-year, not the best chart. I mean, you look at this, you can't like it. I mean, the US 10-year is broken above the trend line. It's done it on the weekly chart. It's locked in time. So you've got to now say question, we need to watch this. If it gets out of control, further market selling, of course, could happen. US 2-year didn't make a new high in the end, so that's interesting. And of course, Treasuries, we saw a monster volume event in terms of puts. We did see that support level getting hit and probably a large transaction coming through there. But we don't know it's a buy yet. We can assume it is, but we don't know it's a buy yet. We need to clean above 91 to really see good price action, because that could probably start to force in Wyckoff style charting. Now, when we have a look at the percentage of stocks above the 20, 50, etc., just give you an update here so you can see what happened. Of course, this is the 50 and the percentage of stocks above the 20. They all improved. The breadth was up throughout the Friday session. So certainly some improvements there. The American consumer, XLY versus XLP, still a good chart, looking okay. Of course, if you look at something like home builders, you're going to be screaming at me, telling Tom, this thing looks sucky. Let's put it back into perspective. Is this still an overall uptrend? Yes. Is it a concern? Yes. Do I think that it's going to be a problem in 2025? Probably the answer is yes. But at this stage, it's only one read. It's not flashing enough warning signs just yet. When we look at the options market as well, whether you're looking at corporates or high yields or anything, you'll see them kind of falling across the board. There's no doubt there was a little bit of a disturbance in the force within the options market, but it's not like we haven't seen this before in 2024. In most cases, it's a buy opportunity. At this stage, we still think it probably is. But if the market does rally back down here, we'll be the first to let you know. Because, of course, if the options, let's say the stocks start to stabilize, the options flow here starts to stabilize, we move back down on this one, then that's going to show you a cool, calm, and collected market. And then, of course, the markets will probably continue to catch a bid. What happened with gold? Gold just basically held around its same zone. The US dollar actually fell down. So let's have a look here at the weekly. Wow, that is huge. This weekly close was a big deal. And if this keeps falling down this week, it's going to trap heaps of longs. Now, of course, we talked about how it was pretty bullish on the daily. It still is. The trend is generally up. But if we now take this low, so that is 105.70, I don't know that's going to happen. But if we do, wow, that's going to be a huge switch in markets. The dollar must be watched this week. We'll cover that in more detail. Silver kind of sucked, frankly. Let's look at this. Bad close. There's no doubt it's bad close. I'm not going to short silver, but I certainly wouldn't be doing anything on it. I would not be doing anything. If you were short, which you could do, left shoulder, head, right shoulder, yeah, you wouldn't be necessarily freaking out or anything at this stage. So silver, I'm going to call it neutral. It obviously is down on the price action. There's no doubt, but I'm bullish on it. So we'll see what happens first. US oil, what is going on here? Day traders, well, they came in off the day trade level. Sure, that's fine. This is just the most traded zone. Oil's tough. I mean, at the moment, we'd have to go a little bit more bullish in terms of the way it looks, price action wise. Found that bid, but still a bit tough. What about Tesla? Tesla probably found the temp high. Looks horrible on charts. 400 seems like the logical target. Daily 20. And yeah, at this stage there, and possibly even it could go down this low. It is possible. So you've got to be very careful with Tesla. Remember, it went to one standard deviation over 200 forward PE. That's some wild stuff. So we need to look at the price action more. And 400 is currently the put wall. I would think it could gravitate down there. MSTR found a big bid. Obviously, that is a huge deal for it. 11.56, finding its final kind of support level. Still doing the same thing we kind of expect with MSTR. Sideways, correction kind of territory, 1 to 3 months. See what Bitcoin does, and obviously it could move back up. But yeah, nice buy if you got it, I guess, if you like to buy the dip. Semiconductors held themselves. I like that quite a lot. Finding them their way back. Still actually in bullish structure. We'll see whether it can keep holding. Probably the teller is going to be Nvidia. The head and shoulders that everyone's talking about. We did mention this last week. I suspect it's a trap. We'll see whether it is or not. Could be wrong. Of course, I'll be buy here most likely if we get down there. But at this stage, yeah, we're looking for 140 to be regained. 135 on the options will be a good positive bull close. And of course, the overall RSI was indicating a huge oversell last week. So a lot of people probably on the short here in Nvidia, probably a few of you. I hope you win, of course, but I also kind of hope it goes up because in this case, I think that would be a very good clear signal to the markets that, you know what, we've just trapped a bunch of retail. We are going to now hit everyone up. And Wall Street loves to take money on both sides. Remember that. They want those lobster, crayfishes, turkeys, and everything else for Christmas. So let's move over to the Hong Kong 50, looking a lot better in terms of structure. We're looking for a 20,000 plus close. That'll be the bull signal. We'll see whether we can get that this week and report on it. And the Russell 2000, yeah, we had that level already, but it just didn't manage to get above that. So yeah, I would say this is a very clear level that we need to be paying attention to. And if we do get above that, another good structural sign from the markets. Great level on the Russell. It is a great level. It's the most traded or one of the most traded areas. We can see here it's got beautiful structure from the previous point. Okay, we came in like an absolute tank, like we got capitulated into. It's very difficult to buy these dips often. It's oversold. There's no doubt about that on the smaller time frames. But the question is, will we actually regain? So far, I'd say the S&P is saying yes, we should, but we'll find out. Long leg doji on the Nasdaq, as you can see here, guys, coming off the first support. Probably no surprise there's a buyer there. And again, we just want to see continuous, like maybe even a small drop into continuous bid. Now let's go over to the elephants in the room, Solana and Ethereum. Wow. Solana getting smashed. Ethereum also in my opinion, getting smashed back down to where I said Ethereum would outperform Bitcoin over 2 months. So I've still got time. We've still got a month to go. But yeah, Ethereum coming back down, as is typical. Whenever you see a sell-off in markets, it's always going to smash every coin more than Bitcoin. But something to watch. 0.04, get that thing alerted. That's going to be a huge deal for alt season if we do get one this season. Ethereum itself did see a bounce, third support zone, lucky. Yeah, we saw a bid there, and it really doesn't want to lose this. 3K is such an important level to hold for Ethereum. So I'm still bullish. I've changed nothing on that opinion. However, and I like the bid too, but I do not like 3K under. Yeah, I do not want that. And of course, it's a shame because you have the candle like this. This candle suddenly becomes quite a negative read on markets due to the fact it dropped the low. But 4,100 worthwhile alerting to. And obviously, yeah, if you've got stops down here, I don't think it's safe under this low. I think you've got to put it under this low. So we'll see what happens. But a lot of liquidations. I've noticed that slowed down over the last 24 hours. On Bitcoin, much better. Second buy zone, smacked into that 50, held it so far. Important it holds this structure. And again, the crypto market really trying to find bid over the weekend, but struggling at this stage. It's probably going to take Wall Street to show us those dark pools mean business. And of course, if they do, then you would think the Bitcoin will try to resume back up. Not a bad daily close, bullish hammer as you can see there. And you'll notice we still have wicks around this area, suggesting that everyone is buying that block. And yeah, as we know, the liquidations have slowed, which is again a fairly decent sign. In terms of what's going on this week, just remember there are a bunch of bank holidays, a bunch of closed markets around the world. It is in a liquid time. Generally speaking, we don't see this type of vol into Christmas, but when we do, it can become a liquid, so just be careful of day trading too much around it. As always, guys, it looks like there is a pretty good potential for the Santa Claus rally. We do know what happens in Santa. January and Q1 matters tons for the rest of the year. So if you're interested in following along on that data, make sure to subscribe, smash that like button, smash the alerts, and also follow us over on X as well. Thanks so much for watching. We'll catch you in the next one. Bye for now.